it's a milestone on the road to institutional adoption of Bitcoin. So I think it's important. Like, I don't think it drives Bitcoin to $5 million a coin overnight. You know, like some people hype it to be super, super important. I think it's important. It's one of probably 6 or 7 things that are milestones. The significance is big institutional investors want clarity, and they want to know that the asset is a legitimate asset. And so a spot ETF sends a message that it's a legitimate asset. The second thing is many of them have to buy securities. They can't buy commodities. So there are trillions and trillions of dollars that are in these institutions, pension funds and institutional investors, where they can buy securities, but they cannot buy commodities. And so they couldn't buy Bitcoin even if they wanted to buy the Bitcoin. It's either for charter reasons, like I raised $10 billion from a pension fund and I promised them I would only invest in securities that trade on national exchanges, or sometimes it's tax reasons. There are tax requirements. So now I start looking for a security, and if I want to buy Bitcoin, I want something that looks like the asset. Technically, one of the interesting things going on right now is if you look year to date at the performance of Bitcoin, it's up 81%. But there's only one ETF. I mean, there's one major ETF I can use to buy it. That's BITO. You've got a bunch of investors, and maybe you love it, maybe you hate it. You're like, if you're an investor, you acknowledge it as an asset class, and you can either go long, go short, or trade the volatility. I think that you've seen a lot more investors coming into this space, and for a while they thought it was correlated to risk assets, and so they would short it to hedge their risk portfolio, right? And then they thought it was not correlated or negatively correlated, and so that view has evolved over time. But to your point, the best thing that could happen to Bitcoin is the volatility decreases a bit, but the correlations break down, because if it's an uncorrelated asset and it's a legitimate asset, then most of the financial world is underexposed, right? You've got $500 trillion of liquid financial assets floating around, and 0.1% of that is Bitcoin. So if it gets to be 1%, right, 2%, then it's going up by a factor of 10 or more.
Massive changes are happening to the crypto space, especially with the US regulators acknowledging the need for Bitcoin as its independent asset class. Yet this is just the tip of the iceberg, because what's happening next will shock the world. Just watch this video until the end to understand what's coming.
On August 10th, 2020, MicroStrategy announced we were going to buy $250 million worth of Bitcoin. And we announced we were doing it because we had a bunch of money. We had $500 million in cash generating 0% yield. And we figured we couldn't hold the cash, and we should go ahead and invest it in something. We either had to give it back to the shareholders, or we had to buy something with it. And we went through an exercise. Do we buy art or property or securities or gold or silver or soybeans or oil? And ultimately we decided, well, we would give half of it back to the shareholders. We announced a $250 million buyback in the form of a Dutch auction at a premium. I think our stock was around 121, 122, and we announced we'd buy back the stock at 140 if anybody wanted to tender their shares. And then the other half, we would buy Bitcoin with it. And we bought Bitcoin because we saw it at that point as digital gold, a non-sovereign a non-sovereign bearer instrument, store of value asset. And we liked it better than gold because gold miners make more gold, and because gold is a 19th century idea. You can't teleport gold at the speed of light. And we kind of felt like Bitcoin had the appeal of a big tech network. And it also had the appeal of a tangible commodity that was the most scarce commodity. We're now not quite 3 years into it, but I guess in 2 months will be 3 years. So we're 34 months into this experiment. Silver is down 21% since that day. Silver is disaster. Bonds, if you bought long-dated bonds, they're down 19%. So, you could have guessed a very weak commodity and credit, both of those not good investments. What about gold? Gold's down 5%. Gold's dead money. So all that money printing, none of it found its way into gold. So what went up in value, or what up in price at least? The NASDAQ is up 23%, and the S&P is up 29%. So actually the S&P outperformed NASDAQ. With NASDAQ, you kind of had some winners and you had some losers. Bitcoin is up 153%. So Bitcoin's outperforming the S&P by a factor of 5. It's left gold in the dust. We know, I don't have a particular real estate index to give you, but I think anecdotally commercial real estate was high, and now it's getting hammered by the interest rates coming up, and residential real estate advanced rapidly for about a year or two, and now mortgage rates are 7%, and people are talking about the residential real estate market being down. MicroStrategy bought the 250 million of Bitcoin, and then our Dutch auction resulted in only about 60 million getting tendered. So we took another 175 million and bought more Bitcoin. Then our stock rallied, and so we bought more Bitcoin, and then we were able to issue a convertible bond and buy more Bitcoin, 650 million worth of it. And then we were able to issue a $1 billion convertible bond at 0% interest and buy more Bitcoin. And then we were able to sell $1 billion worth of equity and buy more Bitcoin. Then we were able to issue a junk bond. Actually, the junk bond became before the equity, 500 million at 6% interest, which looks pretty cheap now. We bought more Bitcoin. And all told, we bought a bit more than $4 billion of Bitcoin. And we bought it at every price. We bought it at 10,000. We bought it at 20, 30, 40, 50. We even bought some at 60,000. Okay, net result, think of it as Bitcoin cost averaging, for a corporation. Our stock's up 165%. So we actually outperformed Bitcoin over the same time period simply by adopting a Bitcoin standard and sweeping cash flows and equity and debt and the like into Bitcoin. Well, Apple's up 64%, Google's up 63%, Microsoft's up 61%. Those are the three big tech monopolies, and they're monsters in their space. But Facebook, Meta is only up 7%, Netflix is down 12%, Amazon's down 17%. You can imagine why. Amazon's a difficult business, lots of labor, lots of logistics. So I think that's the snapshot. The last 3 years, Bitcoin's been the best performing asset. Why? It's just the most thermodynamically sound, simplest idea.
Bitcoin has been the best performing asset for the past 3 years. But people are now wondering what will happen next with companies like BlackRock filling for their spot ETF. Is this what Bitcoin needs to reach the next level?
It's a milestone on the road to institutional adoption of Bitcoin. So I think it's important. I don't think it drives Bitcoin to $5 million a coin overnight. Like some people hype it to be super, super important. I think it's important. It's one of probably 6 or 7 things that are milestones. The significance is big institutional investors want clarity, and they want to know that the asset is a legitimate asset. And so a spot ETF sends a message that it's a legitimate asset. The second thing is many of them have to buy securities. They can't buy commodities. So there are trillions and trillions of dollars that are in these institutions, pension funds and institutional investors, where they can buy securities, but they cannot buy commodities. And so they couldn't buy Bitcoin even if they wanted to buy the Bitcoin. It's either for charter reasons, like I raised $10 billion from a pension fund and I promised them I would only invest in securities that trade on national exchanges, or sometimes it's tax reasons. There are tax requirements. So now I start looking for a security, and if I want to buy Bitcoin, I want something that looks like the asset. Technically, one of the interesting things going on right now is if you look year to date at the performance of Bitcoin, it's up 81%. But you know, there's only one ETF. I mean, there's one major ETF I can use to buy it. That's BITO.
Mm-hmm.
Do you know what BITO's performance is year to date?
I think it's definitely lagging. What is it, like 4?
61% instead of 81%. It's lagging 20%. Okay. So, like, that's a big deal. There's a story there. The first year, it tracked really well. But in the last year to date, it's off 20%. And if you look at year over year, over 12 months, Bitcoin's up 43%, BITO's up 31%. So it's lagging 12% in the last 12 months. So there's something there. So if you're an institutional investor, the spot ETF gives you a perfected way to do it as a security, theoretically perfected. Look, if an ETF charges you 100 basis points a year, then in theory, that costs you 20% of your performance over the course of the duration of the asset. So it's not ideal, but a 25 to 50 basis point ETF would probably be reasonable. You certainly can't take a 10% a year hit, right, trying to do it with futures. And if you can't hold the asset, the issue with buying the asset is not just the tax issue or the charter issue. Technically, it's harder, but then you got to go through the custody issue. And so I think the spot ETF is an endorsement of the regulators as a legitimate asset, but also it provides an on-ramp where I could go and I could buy $10 million of it in 30 seconds by punching a button. And the alternative would be you could spend 30 months as an institutional investor and not be able to technically buy the same amount of exposure because of all the legal and accounting and governance factors that come into play. Thousands of people or actors all doing things at the same time in the world, and it's too complicated. For example, the EDX exchange, it came live, but apparently they were working on it for a year. Okay, so maybe I do think people make rational decisions. For example, if I was BlackRock and I was looking at all the spot ETF denials, the SEC has said we're not going to approve one because we want an exchange which is non-custodial, that agrees to a surveillance agreement, that's a regulated exchange. I probably would have said there's no point in filing a spot ETF until it looks like there might be one of those. So maybe it took 11 months for EDX to come out, and then EDX was going live, and they said, okay, well, EDX is going to go live sometime soon, so I guess we'll file our application because the odds just went from 90% against us to 50-50 or 75% in favor. And if you put that together with all the political pressure on the SEC right now to approve a spot ETF, which is built over the past 6 months, right? And you could imagine maybe they thought the odds had switched, and then of course the next 4 companies that file for a spot ETF or refiled, they obviously looked at EDX, they looked at BlackRock, and they said, well, if BlackRock thinks they're going to file, and if EDX is coming online, then it makes sense for us to get back in the queue. So I think people act rationally based upon the information at hand, but ultimately I think there's a lot of independent parties that are all going at their own speed, and sometimes it takes them the government takes a year, 2, 3 years to do some things, and so I don't think anything is that easy and that coordinated. I think you would like for all this stuff to be worked out over the course of weeks or months or days. But generally, it feels like sometimes it takes a year, 2, 3, 4 years for something to happen, which was pretty obvious.
And before we have Michael talk about other crypto and what's coming for them in the future, let's have a look at what Michael calls digital currency networks and how Bitcoin fits in.
So digital currency networks are very controversial, and there's a lot of uncertainty. But on the other hand, owning property is not controversial. And if Bitcoin is digital gold, then there is no nation of gold with subpoena power that's going to attack you for taking away its monetary premium. And the same is true if Bitcoin is better investment than real estate, Well, Congress and the Treasury and the FBI and FinCEN, they're not going to take a lot of issue with the fact that you actually demonetize some commercial real estate by 2%. So Bitcoin is emerging as this digital property network, and it meets the use case of store of value. And all of the endorsements have made a huge difference. I mean, you got 4 presidential candidates that have come out pro-Bitcoin. That's kind of like a chicken in every pot, and everybody deserves their own home. And if everyone has an entitlement to own their own home, and I'm going to launch Freddie Mac and Fannie Mae, and I'm going to make home mortgages cheap because every American deserves to own a home, what you get is a lot of money flowing into that asset class. There's a reason real estate's gone up 7% a year in all these cities for the last 100 years. Right? Because it's a supported asset class. I think that Bitcoin is emerging as a supported asset class. If you've got the regulators endorsing it, Congress endorsing it, legislators endorsing it, you've got candidates endorsing it, then I think you've turned a corner. So I think we've turned a corner where you're either going to be an investor or a technocrat, or the last is maximalist. And maximalist has sometimes people painted with this very, controversial brush. But I just think of maximalist as someone that thinks they're technocrat that thinks it's an ethical good. Like the don't be evil, remember when Google said don't be evil? If you thought it's an ethical good to give property rights to 8 billion people, and everybody in Africa, South America, and Asia deserves property rights, and you see a network that is nation-state resistant, that is not controlled by any company, that's a global network, that's open, permissionless, then you could just say, I'm a Bitcoin maximalist. I believe this is an instrument of economic empowerment. It's good for the world. And that's not any different than saying I'm a math maximalist. People should learn mathematics. I think they should learn language. They should learn to read, write, do arithmetic. I'm in favor of fire and electricity. And so once you take that view, it's a bit stronger commitment than if you're a technocrat.
And in case you haven't heard Michael explain what a technocrat is and the types of people who talk about Bitcoin.
In the crypto industry, I think in general, the question is Bitcoin going to be banned, hacked, or copied? Right? It was the biggest crypto asset 3 years ago, but will it be banned? Will it be hacked? Will it be copied? That's the question for any investor. What happens next? There used to be a lot of Bitcoin skeptics. There were, people, there were the deniers. I talk about them. People that think Bitcoin is tulip bulbs and a Ponzi scheme. Peter Schiff being the most famous. The deniers are pretty much silenced now, right? I mean, they have fallen out of consensus. Bloomberg, New York Times, Wall Street Journal, CNBC, Congress, the SEC, the CFTC, the Treasury, all the central banks of the world, they all kind of acknowledge it's not tulip bulbs. It's a real asset. It's a digital commodity. So the deniers are out of the mainstream. Then you have the skeptics, like Bitcoin is a really good idea, but it's too good idea, so the government's going to ban it. And we had, Jamie Dimon said it, you've got other people that said it, Larry Fink once said, it's an index of money laundering. So the skeptics held the day for a while. But I think in the last 24 to 36 months, the skeptics have kind of fallen out of the mainstream as well, because you can't with a straight face go on CNBC and say Bitcoin's going to be banned when they've got the ticker in the lower right corner, and they've got the head of the SEC, the head of the CFTC, and the Secretary of the Treasury, and then Raoul Pal all saying, I think it's going to be around for a while. It's a real thing. So the skeptics don't really have much power. So now if it's an asset, you've got a bunch of investors, and maybe you love it, maybe you hate it. You're like, if you're an investor, you acknowledge it as an asset class, and you can either go long, go short, or trade the volatility. I think that you've seen a lot more investors coming into this space, and for a while they thought it was correlated to risk assets, and And so they would short it to hedge their risk portfolio, right? And then they thought it was not correlated or negatively correlated. And so that view has evolved over time. But to your point, the best thing that could happen to Bitcoin is the volatility decreases a bit, but the correlations break down, because if it's an uncorrelated asset and it's a legitimate asset, then most of the financial world is underexposed, right? You've got $500 trillion of liquid financial assets floating around, and 0.1% of that is Bitcoin. So if it gets to be 1%, right, 2%, then it's going up by a factor of 10 or more. I think we'll get the uncorrelated, and how much volatility we get, it's unclear. But as more people adopt it, and as liquidity increases in the mainstream institutional investor market, I think the volatility will decrease and is decreasing. I mean, the last two investor classes are the technocrats. And this is a set of investors you want. They're the people that think Apple and Google and Amazon and Facebook and Microsoft are really powerful networks. And you can see the big winning stock ideas have been Microsoft, Apple, and Google. And the reason why is because they're more powerful than most nation states. It should be pretty clear to people right now that Apple has 1 billion users, and it would be easier for you to leave the United States of America and pick up your life elsewhere than it would be for you to leave the Apple ecosystem. And it's a very interesting idea, but if you're a tech investor, you could get behind that idea, and eventually just about everybody that got insanely wealthy over the past 20 or 30 years was a technocrat, really, if you think about it. And then eventually you get the Warren Buffetts and you get the Carl Icahns of the world that say, I don't know if I understand it, but it seems like a juggernaut, so I guess I'll buy $10 billion of it. And Warren Buffett made more money on Apple stock than he made in his entire life on everything else you've ever heard of. And he made that money faster. And so the technocrat, kind of wins over the mainstream investor. And Bitcoin is emerging as this dominant digital monetary network, or dominant digital commodity network, or you could call it dominant digital property network. The thing that's most controversial is currency. Currency is very controversial. Every nation state wants to control their own currency.
But what about the other crypto, which are considered securities by the SEC?
I think that the crypto industry right now has a legitimate path to list assets without an issuer. Okay, and so if you think about the digital assets industry, I think digital assets mean digital currencies, digital commodities, digital securities, digital tokens, digital exchanges. Well, if there's a set of legislation in the U.S. or some country that defined a digital currency, and I'm thinking stable coin here, right? Digital dollar. Or if it defined a digital security, some company, or foundation issued their own token. If it defined a digital token, like either a NFT token or maybe more likely a fungible token, like 100,000 Tom Brady superfan tokens, right? If you define those tokens, you could create a legitimate path to register them and trade them. So what's lacking right now is there is no taxonomy of those assets, and there is no path offered by the regulators. The SEC and the CFTC have not offered a definition or a path. So now you're waiting for Congress. So you're going to need a law. You'll need a law, and the law will need to define the taxonomy. I can see a world, like as a technologist, I can see a world where every security trades 24/7 digitally, like Apple, Google, Microsoft, everything. I can see a world where you have a light security token, which, is not a company, but it's like a crypto token, and it has lighter disclosures, and you make maybe, there's a difference between the disclosures around General Electric, the conglomerate, and the disclosures around Solana, a network token, right? You would think, I could see a world, but we're going to need a political process or maybe a political regime change for that to be put forth I actually can see the benefit of every celebrity being able to issue their own token, Katy Perry token, Tom Brady token. They could own their own brand, etc. The issue is you need an environment. You need a legitimate path to issue it. Because what happens if Tom Brady issues 10,000 Tom Brady tokens and then issues 100,000 more and dilutes the value of the first 10,000 after representing that he never would? You know? Like that's
What's the recourse?
That's the issue, which is for you to trade these things with the general public, there needs to be a common methodology and an expected set of norms where everybody understands what they're getting into and what risk they're taking so that they don't say they were cheated after the fact. And the problem is if there's no defined set of rules, there will always be a person saying, I was misled. That's why securities are much more complicated than commodities in that regard, because commodities are not issued by an issuer, so there's nobody to sue. If you bought a bar of silver and it didn't go up in value, you know, you're not suing someone because they degraded the silver and turned it into corn mush. But when you buy the celebrity token, and it goes down in value because they flood the market with tokens and they promise they would invite you to a barbecue, but then they stop hosting the barbecues and the token's worthless. You know, you're going to sue them, and the issue will be what's your legal recourse. So ultimately, the issue right now is there's no legitimate path for someone to issue all these digital assets. Like if I was sitting in Congress and I was testifying, the question I'd be asking is, do you think it should be possible for someone to trade Apple stock on Saturday afternoon between two digital exchanges? And do you think it should be possible, or it would be good for the world if I could take custody of my Apple stock on an Android phone, right? Because the technical debate is we want to issue assets 1 million times cheaper, and we want to move them 1 million times faster, and we want to give self-custody to everybody on every device. And it's empowering for the 8 billion people on the planet. It's threatening to the status quo of the 20th century financial establishment, because it's the 20th century organizations that have monopoly on trading and a monopoly on custody and a monopoly on issuance of these assets. And the real issue, instead of fighting for Do Kwon's right to issue Luna and do what Do Kwon wants to do with Luna token, that's not your moral high ground. The moral high ground here would be to say, why can't Apple issue an Apple token or a share of Apple stock to trade on a 24/7, 365 exchange? And why don't I, as an Apple shareholder, have the right to take custody of it? And if you started from that point of view, right, then you actually get the debate to be on a more politically sound basis, I think. Right now, the two sides are talking past each other, right? And I think that absent bipartisan legislation that defines digital currencies, digital tokens, digital securities, digital commodities, digital exchanges, and says we have a right to self-custody assets and a right to issue these assets. Here's how you do it legitimately. If you don't have that, it's difficult for the industry to move forward in 10x, all these other tokens.
This is a great view of what's happening with cryptos that have no regulation or clarity about what they are and what they are meant to be. As soon as that happens, this will take the crypto markets to a whole new level.
Why can't 2 million artists issue their own tokens? Well, I'll tell you why they can't right now. Because there's security, and it's $25 million a year to comply with public securities law, right? There's two problems. First of all, you have to spend $25 million a year in order to issue a public equity. Like I know, I do it. I'm in the business. But second, even if you do it, MSTR stock doesn't trade on Saturday afternoon. Like Binance tried to trade it, it got shut down by the regulators. So it's not just a matter of disclosure, it's a matter of the definition of the security. And then third, even if you pay $25 million a year and it doesn't trade, you also can't take custody of the asset. So what we need is we need leadership at the political level to define the digital assets framework. And then once we do that, we could define a method, a legitimate path to issue and trade and custody these things. And you just have to be aware that there's a lot of profound debate. Like, for example, digital currency. It'd be great to issue $10 trillion of US dollars so they circulate in Africa, Asia, everywhere in the world, and it would be good for the 8 billion people on the planet, especially the 7 billion that can't get dollars. But there's a lot of people that don't want that because they want this to be a system of control, and they don't want the dollars to circulate freely and fast and non-KYC. The political debate is does the establishment want to allow, so much innovation, right? Are they more concerned with control, or are they interested in innovation? And that's why it'll be a political fight. Like there's no political support for a centrally controlled digital currency, a CBDC. We know that. The Congress doesn't want that. But on the other hand, there isn't any political support for a freely circulating digital currency either. So we're in this interesting gray zone where there's a massive fight between the establishment that wants to control the monetary system and then the forces of technology, right, and progress that want money to move at the speed of light between 100 million companies and 8 billion mobile devices. And that's the challenge that I see right now. And there's no legitimate path today. I think that the U.S. is going to clearly be the political actor here. So everybody's going to follow what the U.S. does generally. And so you kind of got to look to Congress, either to the Senate or the House, to offer some legislation that will define a digital assets framework and a legitimate path to registration.
If you enjoyed this video and want to see how you can 100x your wealth using Bitcoin, check this keynote Michael Saylor did in Prague a few days ago.